Welcome, everybody, to another edition of the Dr. SM podcast. Today, we are discussing investment. And I've got one of my great friends, old friend. We were together in school, and today we are discussing investments. So let us welcome one and only Simba Chopera. Welcome to the Dr. SM Chirisa podcast.
Thank you for the invitation, Doctor. Thank you to your viewers. Appreciate the invitation.
Now, my audience is quite diverse. It's got professionals, hustlers, young guys who are hungry to make it. And today we want to discuss, investments. Why should they listen to you? Who is Simba Chopera?
Thanks, Doc. So basically, in terms of my background, I'm a qualified accountant. I also have spent the greater part of the last 30 years post-qualifying in investment banking. And the latter part, I was in asset management and pension fund management. So I would say I've spent quite a bit of time in this industry. I hold also a professional qualification in investment banking and a master's in leadership and management. As we always said in the past, I've been through the mill. I've done it all, I've seen it all, and hopefully I can help people not make the same mistakes I made 30 years ago.
And that's exactly why we brought you, because our audience is, like I said, they are hungry and ferocious. They want to succeed. And the purpose of this podcast is to make sure that they don't make the mistakes that will delay that process. So let's start about investment. What's your investment philosophy in general? When you talk about investments, what are they, and what is the investment philosophy that you hold dear?
Doc, growing up, I was raised by a blue-collar working parents, and we came from Shtungwiza. My father had a very clear philosophy. He always used to say to me, son, money talks. When you've got money, it's lots of talking. Riches shout. Have you ever seen anyone who's picked up money? Yeah. But wealth whispers. No. Just make sure you make wealth and you make it quietly. And I've really lived with that philosophy all my life. I believe in building long-term wealth. I've learned that there's nothing as important as being financially secure. We've got an acronym called FIRE. Being financially independent can make you retire early. FIRE, F-I-R-E. It protects you from a lot of pressures if you're financially independent and financially secure. And as an investment philosophy, I believe in creating financial freedom in order to safeguard your life and those of our children and the greater society. How we do that is, I believe, we solve problems. If you solve problems, you make money. But if you chase money, you create problems.
Wow. No, we are always talking about investment. And the question for me is the risk versus the return. How do you balance that? Because a lot of people that are watching have started things, have put in things in certain investments, and they've lost. Some of them are grounded right now. Some they are really in doldrums because of the risk. What's your risk philosophy, and how do you mitigate so that you can get the return that you're looking for?
So there's the power of choice, Doc. Present value against potential future returns and future growth. One of the things that you need to understand is whatever return you are looking at attracts risk. And normally the rule of thumb in investment is the higher the returns, the higher the risk. You want quick returns, you are assuming a lot of risk. I've always maintained to my clients over the years, and I've been taught by one of the best investment gurus that I've seen or ever come across, to say, you don't invest funds that you are not prepared to lose.
Okay.
The minute you are investing, you're putting your money at risk.
Risk.
The higher the risk, the higher the returns. The lower the risk, the more moderate the risk. And when all is said and done, one needs to diversify their risk appetite, number one. Number two, always the golden rule is liquidity.
Okay. Explain what is liquidity.
So liquidity is how much cash one has. A lot of the times, there are people who are very wealthy in assets, but are illiquid, i.e., they cannot transact. You can own property, for example, but when a crisis hits, you cannot convert that property into cash. When Gogo Chirisa needs help, she needs cash. But if Dr. Chirisa has got a portfolio full of properties, he cannot liquidate those properties in time to meet the liquidity need of whatever circumstances arisen. So liquidity is key. Balance sheet is fundamental, i.e., how much assets you've got. But liquidity is the lifeblood that keeps you as an investor and your family secure. So always balance risk, return, and liquidity. Those are the three things that one needs to play around.
Is there a liquidity level that one needs to maintain, or a ratio that you can give our audience to say this is the amount of liquidity that you need to maintain?
I think it varies from person to person, and depending on your lifestyle, age range, and capacity to meet your recurring needs. If we start at a granular base level, when you get a job, when you start off as a young person, you go to school, you look for a job that pays you. What's the first thing you buy? I remember you, Doc, you bought a car.
Of course.
Every young person's dream.
And at
that level, when you have a car and a cell phone, you are the king. The next thing is you started renting a flat, right? You wanted to stay in town. You rent a flat. You meet the missus. You realize that the flat is too small. You start renting perhaps a bigger flat. By then, your income has increased. We were probably one of the last generations to be able to access mortgage finance. And I thank God for that. You then access credit. And for some of us, we're lucky enough to go into banking. We were blessed in being in institutions where they would ask you, the first question is, where do you stay? I mean, I remember one of my mentors asking in a general question, if you work for this bank and you don't own a property, there's something wrong with you.
In fact, we'll come back. We hold that thought. We'll come back after this when we start to talk about property.
Yeah.
See us in the next segment.
Turn your dreams into reality with the right loan, whether it's for business, education, asset purchase, housing, emergencies, payday needs, or micro insurance. We have a financial package tailored just for you. Ways Road Investments, delivering potential.
Welcome to the second segment. Now, before we went to the break, Chopera, we were talking about real estate. Maybe I will then pose a question and say, let's talk about the asset classes that are there. And in Zimbabwe, right now, property, real estate, land is the talk of the town. And I'm starting to feel Or for example, I am actually starting to think that my portfolio is too property heavy and I'm not liking it. Is that, am I being wrong? Should I get worried? Should I put in more real estate, or I should look at other investment classes? What's your take?
Property is a finite resource. Land specifically is a finite resource. If you recall, in years past, we used to have huge residential stands and properties. Now, densification is the order of the day in Harare. It's because the population is increasing, but land is a finite resource. We still have the opportunity to densify. Now, instead of having an acre of land for one family, maybe 20 families can have clusters there. It gets even worse. If you go to places like Dubai, the UAE, Europe, the Americas, they're actually starting to build up. So creating opportunities to densify going up. And I would say, when all is said and done, I love real estate. And I believe real estate is a solid investment. You will never go wrong with property, but it creates liquidity challenges. Number one. Number two, it creates, in a bad environment, potential for bad debts when your property is not earning. And capital appreciation can be impacted by the location of your property. So one needs to be very careful when they move into real estate, because you may invest in the wrong area. You may invest in an area that is subject to social ills. But when you invest in the right area, capital appreciation is guaranteed. And I always say also to my clients, real estate can only be demolished by war. In the absence of war, you lock this property, you come back with a bit of maintenance, it will always be there. So real estate is a good hedge against value loss from inflation, creates rental income, and creates capital appreciation for long-term growth. But it's got its own drawbacks.
Now, one of the things that I've seen with real estate is, the amount of money that you need, especially in a mortgage-less space that we are in. How do young guys that are watching, that are part of my mentorship class, build that capacity? Are there other alternatives where they can start investing, where they can grow their money? Look, we're talking about the stock market or the money market. Can we delve into that and say, is there an opportunity where you can grow your money there and then take it and then come to the real estate? Or what is the mechanics in given the experience that you have?
So the latest craze in Zimbabwe within the real estate space is something called REITs, real estate investment trusts. Basically, you are partaking in the ownership of a larger pool of funds and having a rental claim. You may have seen the development on Idi Mnangagwa Road, Highland Park, Greenfields on Samora. Fuma has got a REIT, Corner in Avondale. And most recently, there's an Eagle REIT that has developed a shopping mall in Mazoe. Okay. Basically, this is pooled funds that are well managed, and you are able to extract your value from those. And they've got tax advantages to doing that. Okay. So that's the latest craze. But when that's said, you move in real estate in stages. You can start off small, start off buying a residential stand, but be very careful of unapproved developments. And as a rule of thumb, if it's not titled, don't put your money. Okay. I think that's one thing that young people need to, or also look out for fake title deeds. It's always expensive to use conveyancers and lawyers, but it's the safer option. One of the unintended consequences of dollarization and the absence of mortgages has been the need to exchange property and cash fast.
Mm-hmm.
It's always dangerous. Go through the motion. Your cash should only go to the seller's hands after the title has changed hands.
Wow.
That's one thing young people need to learn very quickly. Otherwise, you get all these fake title deeds and buying into unapproved developments where Sitofare will come and demolish.
I'm always getting questions on the stock market. Can you give us insight on how to maneuver that space, especially when we look at our ZSE, which hasn't grown that much for the past 20 years. And now with the introduction of VFX, what's the difference between these two? Where would a young guy who's earning some money and maybe 300, 500 to invest, is it even possible to invest that amount of money in any of this?
Again, it's a misplacement of facts to say the ZSC hasn't grown. The ZSC has literally created value by spinning out most of the companies that are currently listed on the Victoria Falls Stock Exchange came off the ZSC.
Okay.
For example, the Insco Group spun out several companies that have now resulted in value on the Victoria Falls Stock Exchange. And most recently, Econet delisted from the Zimbabwe Stock Exchange and listed their infrastructure company on the alternative exchange, thereby releasing value. Again, investing in stocks is not for the faint-hearted. You don't invest money that you want to use to buy bread tomorrow.
Okay.
So as a rule of thumb, you invest money that you are willing to put away for a long time.
What is that long time? Average?
It varies from person to person. If you put watermarks, for example, to say, I'm putting my money into this share price, if it hits this price, I would have yielded the expected return that I want. Remember, you invest in listed stocks for two things: capital appreciation and dividend income. Dividend income is your share of the profits arising from your ownership of that counter. So always move into the Zimbabwe Stock Exchange and the Victoria Falls Stock Exchange with a clear exit strategy and expectation. Why are you putting your money there? Are you putting it perhaps to save for buying a house, putting your child in high school, or putting your child in university? When you reach that, you exit, regardless of what happens going forward. But unfortunately, our inflation-altered mindsets have taught us that you need to keep in.
We are all dealers. We are now the dealer mindset. Quick money.
Quick money, yes.
Maybe we can also hold that thought as we go to for a short break.
Turn your dreams into reality with the right loan, whether it's for business, education, asset purchase, housing, emergencies, payday needs, or micro insurance. We have a financial package tailored just for you. Ways Road Investments, delivering potential.
Welcome back to the third and final segment of this podcast. Mr. Chopera, let us jump. I mean, we've got so much to talk about. I think we're going to invite you to our masterclass. Let's talk about the money market.
Okay. So the money market is basically the short-term placements of money. Perhaps you've got funds for school fees that you want to pay next term. You can put it with a financial institution. The nice thing about it is it's relatively lower risk because your capital is guaranteed. but your return is also steady and low. You can place money short term, 30, 60, 90 days, or go longer, depending on what you want to use it for. This is important for emergency funds and short-term goals, like I said, school fees. And there are so many products that are all over the place. And if you are a starter, there's also unit trusts that you can access, fixed income products, but of a unitized nature. Your old mutuals, CBZs, etc., offer those. And at least your capital will be safe and you earn some return. But this is mainly for short-term placements. In the past, we had treasury bills and bonds. These are of a long-term nature and of an institutional nature, maybe not well suited for individuals.
Now, most of the guys that are watching are young, and there is, pressure for quick money or to rise fast. What are the pitfalls that they should avoid? Even though there is that pressure and need to succeed, what would you say?
So please work within the registered and licensed space, because banks are regulated by the central bank. Equally, investment companies are regulated by the SEC. Work within the registered space. Do not invest on hot tips or zinzurukupisa, kia. Look for investment opportunities that are transparent and audited. Very important. Have clear contract and a very well articulated exit terms. Again, look for management that's credible and have track records in whatever they are doing. And again, try to diversify your portfolio. What I would urge your listeners and viewers is please avoid Ponzi schemes and pyramids. Doc, you remember pyramids?
Yes.
From way back when. Again, there are these schemes that guarantee unrealistic returns. If it's too good to be true, it's too good to be true.
Good to be true.
Again, avoid being pressured or being recruited into some of these saving schemes. If there's a lot of pressure, there's something wrong. Always have paperwork. Don't do investments without paperwork.
Okay.
It's very important. There are so many social media scams, Forex fake gurus, and critically, as a last one, don't borrow to speculate.
Talking about the Forex trading, it's something that has become so big, especially among the youths. Can you give us in one sentence what your own thoughts or own opinion about that one?
Personally, if I can't touch it, I don't invest in it.
All right. Okay.
I've heard people have made money on crypto. I believe Bitcoin is on 80,000 right now. It was at 120 at some stage, came off, and it's currently steady. There's a lot of volatility and speculation.
All right.
I don't believe if something is high risk like that, you need to put your money in there. You can put a very small portion, but you must be ready to lose it.
Okay.
If you're not ready to lose it, don't put your money there. And never invest based on social media hype.
Sure.
This is the biggest challenge for young people. You go onto YouTube, there are people who are making millions of money on crypto, and young people are losing their money. Remember, money is not made.
The young people are the business.
Yes.
Not the crypto itself.
The crypto is not the business. Your money moves to someone else.
What would you say? I mean, you have been in the investment space, banking, pensions, and you've advised so many big groups, so many big people. What would be your practical investment strategy for my audience? What would be as we start to round off this conversation?
Stick to professionals. They may charge you a fee, but they know what they're doing. That's, for me, is one of the best advice that I can give young people. Use professionals. They know what they're doing. They've got systems, structures, people who are dedicated to researching those investments. Don't invest impulsively. or on hot tips or pub talk
Okay.
or do pyramids, they will always collapse. And as I said earlier, if it's too good to be true,
It's always too good to be
it's
true.
always too good to be true.
Wow. This has been, so informative, Simba, and would definitely would want to invest because to invite you back because our time is just running out right now. But I would want us to have a conversation where we really dive into the stock market, which counters, what's your strategy there? Maybe as your parting shot, what would you say, touching a bit on the stock market, because it's somewhere that I'm quite interested in, and maybe your parting shot to our audience.
I would say on the stock market, look out for simple businesses that have got free cash flows. A business may be profitable, but if it doesn't have free cash flows, you'll struggle. Invest in businesses with easy to understand and models and management that know what they're doing. Also, look for businesses that don't have too long investment horizon, and so that you can be in and out as you see fit. But for me, the most critical one, invest in businesses that create positive cash flows with management that know what they're doing.
Wow. I don't know whether it's just me, but I'm interested. Where can people find you if they need help, or companies or businesses? Where can they find you for advisory services?
Thank you, Doc. We can be found on our website with our contact details. We are based in Avondale. I'm part of the CSC group. Our website is www.cscgroup.co.zw. And all our details can be found on that website.
Thank you so much, Mr. Simba Chopera. I hope your viewers, wherever you're watching us from, this was something that added value in your investment mindset, and know that there are other investment vehicles. And one of the things that I always say as a business mentor is that you need to have a portfolio. You cannot put your eggs in one basket. Even if this thing is firing at the moment, at some point, you need to have a balanced portfolio. Until we meet next time, God bless you.